Houston Real Estate Radio starts right now.
Welcome back. This portion of Houston Real Estate Radio is being sponsored by The Perfect Light. They can take care of all your outdoor lighting needs this spring, and you can find them online at theperfectlight.com. I've got Gary Cooper joining us from Gary N. Cooper, CPA PC. They're a full-service public accounting firm here in Houston. And thanks for calling into the show, Gary, because I know you're really swamped out there, huh?
It's busy. I look at it as being a blessing.
That's good. That's good. Yeah, I know just a few days till the tax deadline. Everybody's trying to get in those last-minute issues, huh?
Well, and, people don't understand when they owe money, we have to prepare an estimation, and they should pay with their extension to prevent from being penalized.
Mm-hmm.
So, although they give us their items last week, this week, we still at least have to make an estimation.
So it just adds on to all the work you're doing trying to make the deadline, huh?
Well, take care of our clients. I mean, we got to make sure that we take care of them, and that's what's important.
Sure. Well, there are a lot of listeners out there that are trying to decide, if they should continue to rent this spring, or if they should purchase while interest rates are still low. What kind of tax advantages are there from your experience and your point of view as an accountant? What do you think about the tax advantages to purchasing versus continuing to rent?
Well, let's first talk about the economics. Houston is growing at a rapid rate, and real estate continues now in the Houston market to go up.
Mm-hmm.
Secondly, you have interest rates. I purchased a second home and financed at 3.25%.
Isn't that great? That's just phenomenal.
You're not going to find money this cheap.
Right.
Now, then you've got to look at that interest rate after tax. So realistically, for that money, I'm only paying about 1.9%. So you've never seen interest rates like that in the history of time, at least not in my life. So economically, it's a great time. From the standpoint of taxes, what it does, it puts you in a position to itemize your deductions, because the mortgage interest and the property taxes are deductible on Schedule A. So that opens up now for charitable contributions, non-cash contributions such as Goodwill, Salvation Army, tax preparation fees, medical insurance. There's other items that go on Schedule A that go over and above on top of that mortgage interest and tax. Out-of-pocket business expense, if you have to spend money to serve your employer as part of an itemized deduction. So it can have somewhat of a compounding effect.
And when you rent, you really don't have any tax advantages, or are there any?
No, you're basically giving your money to a landlord. Mm-hmm. And actually, I purchased my own office building. For that very reason, I would rather build equity and get my interest deduction, my depreciation deduction on the office building.
Yeah, you've got a great office right in Houston, so I know that a lot of your clients out there are listening to us today, huh?
I believe so.
So what about the mortgage interest deduction? There's been a lot of talk about getting rid of that. Do you think that's something that our government will keep in place?
I do, but, it's one of those deductions that's kind of a double dip for the government. They don't get revenue on either side of it, and it's a losing proposition for taxes. But it stimulates the housing market,
mm-hmm.
and construction generates quite a bit of jobs.
Sure.
And if you were to do away with that deduction, people very well may consider renting versus purchasing.
Well, if they were to get rid of that deduction, would that that would change the whole Schedule A, and it might get rid of some other things too, right?
Well, we're getting into some deep thoughts now. I'm one of these people that really don't believe they'll ever go to a flat tax, because the tax laws assist in stimulating the economy.
Mm-hmm.
For instance, the mortgage interest deduction and property tax deduction people would rather purchase than rent because they can deduct those items and others along with it. That's one reason. I mean, there's obviously economic reasons.
Well, just rental prices in general are at the highest levels they've ever been. And so people who are renting, a lot of times, in a lot of cases that I've seen, the amount of money they're paying per month in rent, they could get twice the house for if they were purchasing it versus renting it.
Well, it's funny that you say that because a lot of my clients now are forming LLCs and are purchasing rental properties. Because you're right. I mean, there's a great market. We're under market in apartment complexes and rental properties, so now people are investing in that.
Right. That brings us to a question that I have about the rental properties. There are a lot of people out there who aren't really investors, but they just want to, purchase one or two rental properties. Does that complicate your taxes a whole lot? If you're someone who just kind of does your own taxes or really keeps your taxes simplified, is that something that's really going to complicate things?
Well, it does complicate it somewhat because, first of all, if you do purchase a piece of rental property, I would heavily guarantee you put it in an LLC. You put it in an entity that you protect yourself from a liability standpoint. And that can be disregarded, so that can still be filed on a Schedule E on your personal tax return.
Okay.
But you just got a separate entity structure that you need to set up. Now, also filing your tax return is going to add a little cost for your tax preparer because the Schedule E does need to be prepared to where it has the rent income and all the applicable expenses, interest, the taxes, repairs, maintenance, management fees, depreciation, things of that nature. But normally you've got somebody buying your real estate for you. If you get the right price for the rental, you basically can break even or maybe even show a small loss. And so it's a great investment. And you've got appreciated real estate here in Houston, so I think real estate's a great time. I think it's a great time to buy real estate.
Absolutely. I agree with you. What about property management companies? If you are a landlord and you don't manage the property yourself, you use a property management company, is there any benefit to that at all when it comes to your taxes? Or are they just helping you by taking care of collecting the rent and managing the property for you?
Well, I think, the fee is tax deductible, but what I think that it's a personal valet service. They're taking care of everything. Once upon a time, we had a rental property in Dallas and had somebody taking care of it. We didn't have to do a thing. If the renters moved out, they would find new ones for us. They would take care of the maintenance, the whole thing. So it's very well worth it, in my opinion.
So you can deduct that. That's a good thing.
Oh, absolutely.
Okay. Some homeowners, are trying to decide whether they should pay off their current mortgage or refinance it and continue to have the mortgage. There's some people who, had their mortgages back when rates were 5, 6, 7%, somewhere in that range where they can really save some money now refinancing, or they have the option to pay it off. What do you recommend to people as far as, we'll first address the refinancing. Do you recommend that they go ahead and refinance?
This is a personal preference. It's that pure and simple. Some people, Shannon, just do not want debt. They want to be debt-free. And I can't tell anybody that being debt-free is wrong. I mean, especially in an economy that we have that's somewhat fragile.
Right.
Me personally, I think if you can get 3% money, I think it's smart to have your house financed, get the tax deduction. Again, it takes it down to about 1.85%. You just can't find money that cheap, and you should be able to invest your money and get a better return than that. So I'm a believer in mortgages. But again, there are some people that may be listening to the radio right now thinking that I'm crazy. They're the people who don't like debt.
Yeah. Well, and some people get to the point where they don't have a lot left on their mortgage. So if they refinance it and take some money out to do some home repairs or anything that, if they use that money for home repairs, then that is tax deductible as well, right?
Yes, it is. And I think if they're using the money to better the house, I mean, look at it this way. Let's say you have a house for $300,000 and you owe very little on it, and you can take out $100,000 and you can add a room and you can add another bathroom and, you know, put another 500 or 600 square feet on the house. Chances are you'll basically double your money in value. So there's nothing wrong with that.
Sounds good. All right. Well, hey, Gary, I really appreciate you joining us. I know you're very busy, got a lot to get back to, a lot to do before April 14th. It's just around the corner, so we really appreciate you taking the time and calling into the show today. You're listening to Houston Real Estate Radio. We bring you the latest real estate news and information in the Houston market. We'll be right back with a couple of your call-in questions that we receive from our listeners. James and I will be answering your questions, and you can give us a call if you have a question at 281-882-8088.